Good afternoon from London, everyone. My name is Emma McGarvey, and I am Programmes Manager for ONFIS Sustainable Policy Institute. And it is a great pleasure to welcome you to this panel discussion on fiscal policies to tackle climate catastrophe in the Asia-Pacific region. So today we will explore the critical role that fiscal policy plays in responding to climate change. As the most populous and fastest growing region in recent decades, the Asia-Pacific has become the largest emitter of greenhouse gases, and with its susceptibility to hurricanes, to droughts and wildfires, it is integral that policies spurring climate mitigation are implemented. So today we will touch upon adaptation and mitigation policies and the process being made to transition to a greener, low carbon economy in the Asia-Pacific region. So firstly, Masahiro Nozaki, who is Deputy Division Chief at the International Monetary Fund, will present the IMF's fiscal policies to address climate change in Asia and the Pacific study. A panel discussion will then follow with experts from the Asian Development Bank, the International Finance Corporation, and also the IMF. So Masahiro, it's a pleasure to have you, and over to you for your presentation.
Thank you, Emma. Thank you so much for the opportunity to present our paper titled Fiscal Policies to Address Climate Change in Asia and the Pacific. This paper is available at the IMF website for free, so I would encourage everyone to take a look. And basically, the background is IMF has been focusing on climate change issues. We are putting climate at heart of our work. And Asian Pacific is both the region that emits the most greenhouse gas and the region that is likely to suffer the most from climate change. So climate change is a very important issue for Asian Pacific. I myself is a co-editor of this paper. Based on my experience as a fiscal economist for many Asian countries, such as Philippines, Indonesia, and Sri Lanka. And I spent a lot of time looking at fiscal issues in general, including climate change and disaster financing. So here I would like to present to you again the work we've done on fiscal policies to address climate change in Asia and the Pacific. Next slide, please. So I'll start with the background. So the Asian Pacific region has the majority of world's population. It is also the main driver of global growth and includes many countries with substantial development needs. So considering these, Asia and the Pacific has not surprisingly become the main greenhouse gas emitting region, producing about half of world carbon dioxide, CO2 emissions currently. Next slide, please. So it is not the IMF place. It is not our job to say which countries should cut emissions by how much. But what we can say is that China and India and a handful of other globally systemic emitters need to make greater efforts to reduce emissions if global warming is to be kept to the Paris Agreement's goal of 1.5 to 2 degrees above pre-industrial levels. And in this chart, I'd like to show you the second reason why Asian Pacific is the heart of the climate change. The region is already the region most susceptible to weather-related natural disasters, such as hurricanes, droughts, and wildfires, which will become more frequent and severe. As you can see, 37% of weather-related disasters occurred in Asian Pacific. Okay, sorry, 37% of weather-related disasters occurred in the last 2 decades, concentrated in Asia and Pacific. Okay, next slide, please. And here, just to finalize the background, fiscal policy plays a critical role in responding to climate change. First, it plays a role on climate change mitigation. Climate change mitigation refers to efforts to reduce or prevent emissions of greenhouse gases. And mitigation can be achieved by well-designed tax policies that raise the price of carbon together with non-tax instruments. So here, fiscal policy plays an important role for mitigation. And the second, climate change adaptation, which refers to adapting to the effects of climate change and minimizing damage from climate-related natural disasters. Here again, fiscal policy plays a major role because adaptation typically requires an increase in government spending, which needs to be accommodated under the overall fiscal framework. And thirdly, fiscal policy can also help transitioning to a greener, low-carbon economy through investment in climate-smart infrastructure, such as renewable power generation and supporting R&D in green technologies. In our presentation today, I will focus on climate change mitigation and adaptation, but I'm sure that in the following panel discussions, we will touch on this green investment issues. Next slide, please. Now, look at the mitigation policies. Asian countries, like all other countries that have signed up to Paris Agreement, have made pledges under the Paris Agreement to cut emissions. And these emissions pledge are plotted as a red dot, which is measured against the emission commitment vis-a-vis 2030 business as usual projections. And in our view, the most efficient way to achieve these emission cuts is to put a price on carbon, for example, by a carbon tax or emission trading system. And we calculate, okay, what would be the impact of a certain carbon pricing, carbon taxes, $25 per ton carbon tax, $50, $75 per ton carbon tax would entail emission reductions vis-a-vis 2030 BAU, and then we plot it against the Paris Pledge. As you can see from the graph, Paris Pledge varies across countries in the region, in part due to their differing levels of ambition. However, what we can say from this exercise is that a moderate level of carbon tax of $25 per ton would be able to reduce regional emissions by 21% by 2030, overperforming the region's Paris Agreement targets on an aggregate basis, which is 8%. Again, so on aggregate level, $25 carbon tax would reduce regional emissions by 21% by 2030, which surpass aggregate level Paris Pledge of 8% emission cuts. Some countries like the Philippines require much higher rates to achieve their pledges, and others such as India require much lower rates. And also, as you can see from orange bar and green bar, limiting global warming to 2 degrees or less would likely require a carbon tax rate significantly higher than $25 per ton. And another important factor for carbon tax is that carbon taxes can also mobilize additional fiscal revenue. According to our estimate, at $25 per ton carbon tax, additional revenue from a carbon tax is estimated to be 0.8% of GDP on average in the region. And this revenue can be used for compensating for those affected negatively by carbon taxes, financing priority spending, including health, education, infrastructure, and green investment, as well as adaptation spending. Next slide, please. And one of the important value added of our paper, we believe, is our focus on distributional aspects or fairness of carbon taxes. So one thing to remember is that carbon taxes can be progressive or regressive, depending on energy consumption patterns. By the way, a tax is considered to be regressive if it is borne disproportionately by the poor, and a tax is progressive if it is disproportionately borne by rich households. Our analysis finds that a carbon tax is moderately regressive in Australia, China, and Mongolia, but moderately progressive in India and the Philippines, and roughly neutral in Kiribati. And this heterogeneity reflects differences in consumption bundles across households. For example, in China, coal and electricity represent a large share of the consumption basket for poor households. On the other hand, in India and Philippines, electricity and fuel are consumed disproportionately by the richest household. So the main message here is that you have to look at country specifics, whether to determine carbon tax is pro-poor or pro-rich. Next slide, please. Another interesting finding we have in this paper is that it's the good news, which is households affected negatively by higher energy prices can be identified and compensated, and even to produce an overall positive effect on equality. Here, the exercise we had is that looking at household survey for several countries, including China, which is shown here. So first, you calculate initial Gini coefficient, which is measure of income inequality. And then you add carbon tax, $25 per ton. And then use that revenue from carbon tax to compensate households. So interesting finding here is that Gini coefficient improves, that is, income inequality reduces after this carbon tax plus compensation. So if you look at the initial Gini, which is 0.48 within the picture, will be reduced to around 0.45 if you just universally transfer this carbon tax to everyone uniformly equally. That's the next bar, universal lump sum, 0.45. And even better targeting like child grants and DIPAO, which is a minimum income scheme in China, you'd be able to better result in improving income equality. So here again, the good news message is that there are ways to compensate households that are affected negatively by higher energy prices from carbon taxes. Next slide, please. Now, let me show some slides on adaptation issues we looked at in our paper. So first, we estimated cost of public investment for climate change adaptation. So we calculated how much countries would have to spend for upgrading new infrastructure projects for climate resilience and retrofitting existing infrastructure and building up coastal protection. And our estimate shows that the public investment needs for adaptation are estimated to average 3.3% of GDP annually for the region. Important thing is that here again, these investment needs are very heterogeneous. As you can see, the purple bar for Pacific Island countries. So these countries, Pacific Island countries, have the highest public investment needs for adaptation, obviously due to their expensive coastal protection infrastructure needs. Next slide, please. And unfortunately, countries with high adaptation investment needs are also the countries with the least fiscal capacity. Here, IMF has a view on each country's fiscal space. And then we also have an estimate of adaptation costs. So upper right box, which is colored in red, these are countries which has higher adaptation investment needs, but their fiscal space is very limited. So these countries, mostly small Pacific Island countries, would need greater support from international community, in particular increased concessional financing for adaptation investment to avoid increasing debt distress. Next slide, please. And here, another exercise we have is to look at the growth and debt trade-off of boosting adaptation investment. So of course, adaptation investment will require money, and that will need to be financed somehow, either higher revenue or debt. So what the exercise here is that what is the return of making investment more climate resilience or adaptation investment? I wouldn't put too much explanation here, but this is a general equilibrium model simulation, which illustrates macroeconomic implication of a natural disaster, which is in year 6, on GDP and debt, and also private investment. The basic message here is that with resilient investment, which is shown as a purple, you'll be able to use, if you invest in adaptation investment, you will reduce the impact of natural disasters, which occurs in year 6 or 7, and maintain the GDP impact over the medium term. And because of that, even though you see initial increase in public debt, as you can see in the middle chart, you'll be able to stabilize the debt to GDP ratio after the shock of natural disasters. Next slide, please. Here, I'd like to conclude. This is the final slide, and this is message for policymakers. So first of all, policymakers are encouraged to greatly increase efforts to cut emissions, and carbon tax most efficient, but many other options. What matters is the results. And those affected by higher energy prices would need to be identified and compensated. And here, good news is that existing social schemes can be used and will improve inequality. Third thing, there's a high return of boosting adaptation investment, but many of the most vulnerable don't have the fiscal space, so there's a need for increased support from international community for consensual financing for those countries. I stop here. Thank you again for the opportunity to present our paper here.
Thank you. Many thanks for this, Masahiro. So now we'll move on to the panel. So joining Masahiro for the panel discussion will be Ian Parry, who is Principal Environmental Fiscal Policy Expert at the IMF, Satoru Otomo Yamadira, who is Advisor, Economic Research and Regional Cooperation Department at the ADB, and John Nasser, who is Head of Economics in the APAC region for the IFC. So welcome to you all, and thank you very much for joining us today. We'll begin with some opening remarks from the speakers before having a discussion amongst ourselves and opening up questions to our audience. So please do insert your questions into the Q&A function, and I will come to them. It would obviously be fantastic to hear from you, and we do encourage you to ask our panelists questions. So let me first come to you, Tomo, just to set the scene in terms of the work that the ADB is currently doing and conducting in fiscal policy.
Thank you. Let me briefly explain my role currently, also sort of explanation to your question. First of all, my major sort of support is financial integration in ASEAN. Also, the ASEAN +3. +3 means ASEAN, China, Korea, Japan. Financial cooperation, regional financial cooperation, and particularly I'm supporting the local currency government bond market development. So the financial sector development in general, and also particularly government bond market development, so that we are focusing on how fiscal policy also through the funding through the market can support the government. Well, also we support the corporate green bond and sustainability, sustainable or social sustainability bond as well. So we support those efforts through the market. First of all, I'd like to emphasize that given the large investment demand, definitely we need to mobilize not only the physical resources, but also the private sector resources. So the big question is how we can really mobilize those available resources in the country, not just physical, but also the private, maybe through the market function. So that is my first comment.
Thank you. Thank you very much, Tomo. So now, John, I'd like to go over to you and the work that the IFC is doing. Pleasure to have you here.
Okay, thank you very much, Emma. Follow up on what was just said is that we believe while the fiscal policy is extremely important, it's nowhere near going to be enough. To put an economy on a sustainable path, the public sector just doesn't have the resources. It's absolutely essential to mobilize the private sector investment. And IFC, a quick calculation that we did in a recent publication suggests that in East Asia, between 2020 and 2030 in some of the major countries, there's over $5 trillion of private investment needed in green sectors. So this is well beyond the public sector's capacity, particularly given the very limited fiscal space that are in these countries following all of the support that they've given in response to the COVID crisis. So even with new revenues mobilized from potential carbon tax, it just won't be enough. So the question is, what is needed to create this environment for more private sector investment? And this is where the IFC has been particularly focused. And there's a number of things that we have to keep in mind. There's going to be a need to adopt new technologies. So supporting the innovation and innovation ecosystem to help firms do this is something we focused on. There's a vast need for new regulations, things like green building standards, green finance standards. Without these, private sector just can't operate. So we're trying to bring our global knowledge to do that. It's very important to open up new markets. There are a lot of sectors that are still closed to private investment: energy, transportation, other places that needs enormous investment. And if you can't bring in the private sector, and if you don't have good PPP frameworks and other ways to bring them in, then it just won't take off. So we're really looking at building these new markets, creating the frameworks and environment needed to do that. Probably the single biggest market we would like to see is the greening of the financial sector. And this is something that IFC is focused on tremendously throughout Asia. It's a combination of two things. One is it's, yes, mobilizing direct financing, lending, the green bond market, the green bank lending market. This is extremely important, but also it's important to bring in the whole idea of greening the financial sector into their risk management frameworks, such that banks look at the environmental and social safeguard risks into their portfolio and are very transparent about the effects of climate change on their portfolio. So this is all encompassing way that we look at greening the financial sector, which we see as necessary to move to this new path. Finally, we'd like to make the point that it's also important to remember that almost all the advanced economies follow the very high carbon path to development, right? China and the United States, they're still the leading producers of GHG emissions, and that's how they've developed. So it's not going to be that we can just ask developing countries to forego this path and forego their desires for development without providing them an alternative. to help them. It's not enough to use the stick of taxes. We also have to provide them the carrots that will help them move. We'll have to help them with more concessional finance. We'll have to help them with technology transfer. We'll have to help them with, as they develop new markets, by helping offset the risk, which is where our blended finance comes in. It's also important that we recognize that they will have to phase this in, such that we can't make immediate changes. So it's unlikely that we're going to wean people off coal, countries off of coal, directly to renewables. They probably have to go through less GHG emitting or cleaner fossil fuels, i.e. LNG. So we still see that as a very important step. And we have to recognize that we have to work with these countries. We have to allow them to achieve their goals while they bring in the private sector. So let me stop there and thank you very much.
Thank you, John. Some really interesting points there, and hopefully we'll definitely kind of touch upon all of those throughout our discussion. So now, Ian, over to you. Obviously, we've already heard slightly from Masahiro in terms of the IMF, but anything that you want to add on top of that, and maybe things that you're doing within your role?
Yeah, thanks, Emma. I just wanted to emphasize that, we emphasize to countries that a comprehensive strategy is needed for mitigation to enhance the overall acceptability and effectiveness of the strategy. I think carbon pricing should be the centerpiece, but it needs to be reinforced with a variety of other measures in a comprehensive package. One is reinforced to get instruments at the sectoral level, which are less efficient than carbon pricing, but may have greater acceptability because they avoid a significant increase in energy prices. So here we would recommend the use of fee-bates, which are revenue neutral, sliding scales of fees on products or activities with above average emission rates, and sliding scales of rebates on products or activities with below average emission rates. And these can be applied to the transportation sector, power sector, buildings, and industry. A second key element, obviously, is the public investment in the clean technology infrastructure networks that would not be provided by the private sector, even if there was aggressive emissions pricing. So, for example, extensions of the grid to renewable sites, charging stations for electric vehicles. A third key element, which we've already touched on, is to use the revenues from carbon pricing, both in a productive way to boost the economy and in an equitable way that benefits all groups to help build support for the program, whether that's funding investments for sustainable development goals, maybe alleviating the burden of broader taxes on workers, maybe some climate-related investments. Fourth, obviously, is targeted just transition measures. So we need targeted measures to assist the most vulnerable groups, the low-income households, the displaced workers, the vulnerable regions. We also need to limit the impacts on industrial competitiveness as countries move ahead with deeper carbon pricing and mitigation, perhaps through output-based rebates. Some countries are considering border carbon adjustments at the moment as well. And then finally, another key element is to extend pricing or proxy pricing schemes beyond the energy sector. So we need to worry about fugitive emissions, leakages from the extractive sector, emissions from forestry, emissions from agriculture. And there again, as institutional capacity is developed, we can think about either fee-based or pricing schemes, or maybe proxy pricing schemes which measure outputs from those sectors and use default emissions factors. Thank you.
Brilliant, thank you, Ian. So yeah, delighted to have you all on the panel. I think the first question that I'll go to is, how do we think fiscal policy can be achieved? And in particular, what is the role of governments? So as was noted in the presentation, there's obviously a need for increased government spending. How can this kind of be achieved whilst accommodating public debt? John, I think I'd like to go to you first, because we also touched on this slightly in your opening remarks in terms of kind of the role that government can play and needing that kind of private sector support. So what are your thoughts on this?
Well, I mean, as Ian said, that it's important to have the carbon pricing, right? So the private sector reacts to incentives. So if you have the correct pricing model, then you'll have the incentives for the private sector. And there's a wide variety of issues on that, especially when we talk about fiscal policy. It's not just about where the government can invest, it's also reducing distortionary subsidies. So when we have subsidized fossil fuels and then we're trying to put a carbon tax, it's not clear to the private sector how you're going to invest. So again, as my IMF colleagues have said, we need to think of this as a holistic package, and we need to think very carefully about the strategy. So we want to, the government needs to create this environment for private investment by reducing distortions that skew the investments, that crowd in the wrong investments. And we want to have carbon pricing correctly done so that you crowd in the correct investments. At the same time, you have to create the regulatory and policy environments, as the example I use is green building codes, so people know what to do. And you have to also invest in those public goods where the private sector won't invest. For example, in many cases, it's the energy transmission lines. Whereas generation is often done very well by the private sector, transmission is usually not so well done. But again, for the IFC's perspective, is the role of fiscal policy is to create an environment for private sector investment, because without really robust private sector investment, we're just not going to be able to change these economies. So we have to have a consistent view, and we have to have one that is well thought out. And also, I think it's important that they make these consistent across countries, because as we think about competitiveness, if there's distortions in one country that will destroy its competitiveness, particularly in developing countries, there's going to be pushback. They're not going to take it. So this international coordination is probably, I think, the hardest aspect of this, in getting carbon pricing correctly. And again, my IMF colleagues are much better placed to discuss that. Thank you.
Thank you. Actually, just touching upon that, then maybe going to the IMF, our IMF colleagues. So how do you think that can be achieved, that consistency? Because I think that is a very good point. How can we achieve that?
So maybe I can touch on broader fiscal policy perspective. So maybe first, I fully agree with John that public sector's important role is to encourage private sector to contribute. So for that, I think carbon pricing could be important part, because it sends signal to private sector that they need to internalize the higher carbon prices. And on top of that, fiscal policy can contribute to investment in infrastructure, green investment. That will also support the economy, at the same time provide needed infrastructure for private sector. So that's one point. And then second point, maybe more from a general fiscal policy perspective. I think climate change is an important issue, but it's also similar to the challenges for SDGs. So what we need is a good fiscal policy framework. For example, you have to raise revenue in the most efficient way. And then you'd like to also reduce not so good subsidies. For example, energy subsidies, they are typically help rich people rather than poor people. So you have to transform into more pro-poor subsidies. And another example is that investment efficiency, public investment efficiency needs to be improved. And that will provide more bang for buck. So with the little money, you can produce more infrastructure, and that will help save fiscal space. And maybe Ian can please add to my comment. Thanks.
Yeah, thanks. Maybe I'll just say a few remarks fleshing out carbon pricing a bit. I mean, it is very important to get the basic design details right. So we need the carbon pricing to be comprehensive, to cover all the emissions from power, buildings, industry, transportation. We need a price that's predictable and ramping up over time. Insofar as possible, the price trajectory should be aligned with countries' mitigation pledges. Pretty much all countries have pledges for 2030. A large number of them now have net zero targets for mid-century. And we want to exploit the fiscal opportunities. We want to raise revenues, which we can then put back into the economy in productive ways and make sure the overall package is equitable. So at the IMF, we think, well, these basic design features are most naturally achieved through a carbon tax charge on the carbon content of fossil fuels. And pretty much for any country, that's administratively straightforward, just building off existing fuel taxes. Most countries have fuel taxes which are well established and amongst the easiest of all taxes to collect. So all we're talking about is integrating carbon charges into existing fuel taxes and then extending similar charges to the supply of other fossil fuels, coal, other oil products, natural gas, and so on. I mean, a number of countries have moved ahead with emissions trading systems for various reasons. Maybe the Environment Ministry rather than the Finance Ministry is responsible for the mitigation strategy, and it's more natural for them to use trading systems. Typically, these have been applied downstream to large entities in the power and industry sector, but there's no reason in principle they couldn't be extended midstream to cover suppliers of fuels for transportation and buildings. We do think it's important in trading systems to have price stability mechanisms because we hear all the time that a predictable emissions price is critical for mobilizing private sector investments in clean technologies with high upfront costs. So we would recommend emissions trading systems are complemented with price floors, exogenous price floors to help promote price certainty. In addition, we'd recommend that the allowances are auctioned to mobilize revenue. But you know, there are going to be acceptability constraints on the level of emissions pricing that countries are able to implement. Much will depend on what other countries are doing, and therefore we need this mix between the most efficient carbon pricing and other instruments that can mimic many of the behavioral responses of carbon pricing, but without such a big increase in energy prices. And that's why we recommend reinforcing pricing with sectoral measures like fee-based. And in addition, there's other market failures, there's network externalities, technology-related market failures, which will require additional instruments as well.
Thank you, Ian. Tom, I'd like to go to you just to go back to that first question, and in terms of kind of how yourself and the ADB can see fiscal policy as being achieved, the role that governments are playing, and perhaps the work, as we've had a question come through, that the ADB is doing in terms of resilience and adaptation with climate for developing countries and communities.
Okay, first let me answer the easier question, what ADB does. Of course, the ADB support the other member countries. Particularly currently the energy sector, we really support the sort of low carbon emission power plant. So I think currently we are discussing the sort of energy policy, but at least we are really promoting the clean energy transition. So we will have a bit more clear guidance in our loan program. And that also provides the incentive for our member country to move to the cleaner energy. I mean, ADB itself, we are quite committed for the climate finance, and up to 2030, we will mobilize our own resources, about 80 billion USD up to the 2030. Of course, that's not enough to support the entire our member countries. So our also private sector operations also very much focusing on this climate change. So that support, and also we provide a lot of technical assistance, awareness, and also this policy discussion can be led by ADB. Coming back to a more difficult question, to be frank, I mean, I really, no disagreements what you have been proposed. But since I'm very much involved in the policy discussion with the governments through the regional financial corporation, actually my counterparty is always a real policy maker who really need to deal with the nitty-gritty of daily policy implementation. So the carbon tax, particularly those countries like Pacific Islands, as you already pointed out, their physical condition is not good enough. And of course, you may be able to sort of reallocate the resources by tax and providing the more money to the poor. But those resource reallocation is done within the country. That is really the limitation of the fiscal policy. Actually, what we need is a kind of large money transfer from the rich or more developed markets to less developed market who really needs to have more sort of changes. That's why I'm a bit emphasizing on the role of the private sector, private money, but how this can be led to the private sector is quite important. So the fiscal policy is one, but also as John already pointed out, one of the role of the government is to sort of create a framework, institutional framework or guidance, and which may be able to provide sort of a private flow. Again, the challenge is the carbon pricing. How are we going to set the sort of agreeable price? On what basis? Again, we may be able to have some sort of model which may calculate the necessary carbon reduction and a possible sort of investment amount. Then we may be able to calculate some price for equilibrium. Having said, whether it's agreeable or not, that's another issue. It's really the politics behind. And every industry may sort of complain those model. I mean, again, it's really the process of consensus building. The challenge here is unfortunately, the most vulnerable countries do not have enough physical space. So how we can mobilize the money globally, unfortunately, I don't have a good answer, but that is really the challenge that we are facing. Again, ADB is trying to our best, sort of provide whatever we can do, our own resources, but probably the sort of biggest, our effort should be played how together with the private sector, how we can change or redirect the large flows. Again, we don't, we must probably use whatever the resources, tax policy, carbon pricing, whatever, probably we need to do whatever possible. But hopefully that will change the flow of funds. Thank you.
Thank you. Do any of our panelists have any thoughts or responses to some of Tomo's remarks there in terms of the carbon pricing and tax?
Yeah, just in terms of how do you go about gauging the appropriate level of carbon pricing in different countries. With the IMF, we start with countries' commitments they've made. They've pretty much all made emissions commitments for 2030. And we've developed this spreadsheet tool in coordination with our World Bank colleagues. It's called the Carbon Pricing Assessment Tool. And that provides, on a country-by-country basis for over 160 countries, projections of the use of fossil fuels and emissions in the key energy sectors, power industry, transport, buildings. And then we can look at the impacts of carbon pricing. They will affect fuel use in different sectors through altering fuel prices. And then secondly, the key issue is what's the responsiveness of fuel use in different sectors to higher fuel prices. So we think we have plausible assumptions about fuel price responsiveness in different sectors based on quite an extensive modeling literature and econometric evidence. So we're able to back out what sorts of carbon prices are consistent with countries' mitigation pledges. And at the moment, these implicit prices, so this is the carbon price that would be needed to meet the mitigation pledge if you just used carbon pricing and no other instrument. And these estimates that we have, they vary quite dramatically. They're well over $75 per ton for some large emitting countries, less than $25 per ton in other cases. And that's reflecting, first of all, differences in the stringency of pledges that countries have made, and also differences in the responsiveness of emissions to pricing. Emissions tend to be a lot more responsive to pricing in countries that consume a lot of coal, like China, India, and South Africa. And then in addition, we'll look at, well, are these 2030 commitments that countries have, are they in line with net zero targets they might have adopted for 2050? And if not, we'll do some additional analysis of, well, perhaps you need a more stringent target to get aligned with 2050, and what prices would be implied by that.
Great. And while we're still on kind of the topic of carbon tax, we've had a question come through from Jacoco Tikololebu, who said it's obvious that the new revenue stream in the form of carbon tax is inelastic to the revenue base. So what fiscal policy options are best during these difficult times for smaller island states to fund our adaptation mitigation initiatives, apart from assistance from international financial institutions? Who would like to give this a go? Shall I take that as nobody and we can move on to the next question?
Yeah, I think maybe I'll just quick comment on, I have also worked for a small island country called Micronesia. And also IMF has, with World Bank, IMF has provided some detailed analysis called a climate change policy assessment for several countries. I think maybe we can say general things. So carbon pricing or carbon tax can be still useful to create fiscal space, number one. And number two, you could meet the Paris Pledge. The small countries can meet the Paris Pledge. That can, be the support for more mitigation efforts from larger emitters. And then it's a very difficult choice, but countries can ask for financing, concessional financing. And then in the case of Micronesia, important lenders such as ADB, World Bank, and then also United States would be able to help. And then internal effort in these Pacific Island countries would be also important, that they have a very good fiscal management. They have a good public financial management system. And that could also make the case stronger for lending into the country's effort to climate adaptation. Thank you.
Thank you. So we've obviously touched a lot about the importance of private investment. So what are the market mechanisms which are required to facilitate private investment, and what progress has been made in terms of green bond developments and other climate bond initiatives? How can we achieve the significant amount of investment which is obviously needed to achieve climate mitigation? And John, I'd like to go to you first on this.
Sure, thanks. Excuse me. And that's what the IFC focuses on, right? We're really trying to create and build new markets, and we're trying to crowd in private sector investment into the areas that will help move the economies to this more sustainable path. So as I mentioned in my introductory remarks, there's a number of areas that we work on. First is to help bring our knowledge to create the regulatory and policy environments that are needed. And one of the main areas of focus is on greening the financial systems. And to that end, we have a large group that works on the financial sector. We have helped create green lending programs in Indonesia recently. We've really spurred the bond market, the green bond market in a number of countries. In addition to that, we're working on other thematic bonds, for example, blue bonds, because we look at this climate change as a very holistic issue. It's not just about reducing GHG emissions, it's also about nature-based solutions and trying to reduce pollutions, the circular economy, trying to reduce plastics pollution in the ocean. So we see the financial sector as being one of the main levers that can help move this along in every country. So, right now, green bonds are taking off. There's, I think, recent estimate I looked at was almost $1 trillion, depending on how you define green bonds. But that's still a very, very small percentage of the lending that's taking place. So there's tremendous amounts of opportunity to expand this market. But a large part of that is coming up with policies and regulations that are clear. For example, defining what a green bond is. What is green lending? What are the regulations that need to be done to push this? Again, as I said in my introductory remarks, one of the most important things we feel is about being transparent about risks. If financial institutions are transparent about the risks from climate change, then that will help them move their portfolio and help their investors and shareholders to help them move their portfolios. But we see opportunities across the private sector. We see it in the manufacturing sector, which is agriculture. Green agriculture is, again, something that must be addressed if we're going to make changes in our GHG emissions. So again, as I said, the fiscal policy is an important issue. It helps create the environment, but ultimately we have to have all of these measures down at the sectoral level to make these changes, and that is where the IFC is focusing. And I must say, we do it in conjunction, working very closely with the World Bank and the other donors. And we tend to work more with the private sector, while the World Bank tries to help push through complementary policy reforms that will open new markets. I'll stop there. Thank you.
Thank you, John. And Tomo, I noticed obviously something the ADB is also working on too. So can you kind of elaborate on what the ADB is doing here and progress that you're seeing and market mechanisms that you think are required to facilitate investment and green bond developments?
Thank you. Well, particularly, we are really supporting the local currency market development, local currency bond market development. Well, of course, I think green bond issuance in offshore market, the USD, Euro, dollar market is really expanding. But we really want to create a local market, local currency bond market, green bond market. But to do so, first, we also need to educate the investors, also for issuers. We also need to educate the issuers. Also, we need to provide a kind of guidance. So together with the CBI, Climate Bond Initiative, we recognize local green verifier so that facilitate the communication with the potential issuers. And also we provide green bond issuance process information, so the kind of stepwise what can be done for stage 1 to 3 in the local language through our website called Asian Bonds Online. And of course, we organize various webinars. Well, these days, unfortunately, we can't meet face-to-face, so all the webinars for issuers, potential issuers, and writers, and then investors. And gradually, I think the awareness and also the willingness among the investors to invest in those sort of green bonds is increasing, and also the corporate side, their awareness is increasing. I think I want to emphasize the sort of the trend among the investors. Well, green is also important, but I'd like to emphasize kind of ethical finance. I mean, the people start thinking that the money should talk more on some sort of ethics. Often the case that I also received the question, okay, green is important, but how about the social bonds? Under this COVID-19 situation, why don't we spend money on the sanitation, healthcare, hospital, or even, of course, education? So I think we need to take every possible measures. I mean, the issue is not that easy and simple, unfortunately. the developing markets are facing the challenge how to prioritize their spending. Of course, climate mitigation is and adaptation is important, but they need to support the poor. They need to build a hospital. They need to cope with this COVID-19 situation. They need to vaccinate their people. So the question is, how to prioritize. But to do so, they need to do every possible measures. And also, I'd like to emphasize the point that, coming back to the ethical finance. Now, I think institutional investors now questioning the companies, how they do and so. And the company is also willing to disclose the information. And so not just the financial statement, but the various corporate activities need to be reported under the integrated financial statement, integrated report. So the company is also accountable, not just the equity holders, but also the various stakeholders, employees, customers, of course, equity holders, but equity holders is just one of them. Also, to sort of push this ethical finance, probably everybody, ourselves, we also need to think, what are the consequences? And this sort of thinking can be translated into the activities or behavior of institutional investors, then that would affect the corporates. And then that may be translated into the action. Again, the government is important, no doubt about it. Green tax, yes, it's nice to have it, but it's not guaranteed that they can really tax because there's a political issues. But if there is a kind of a growing awareness, they may be able to do so. But how to spend the money, that's again the question. The prioritized area may not be a climate adaptation. They may need to spend more the others. About how we can support them. So of course, development institutions, but private sector's willingness to support developing markets is quite important. Again, I think we need to use the every available measures because the challenge is big. Again, the resource mobilization within the country is of course necessary. But as we all know, this inequality is based on the inequality in the global economic condition. So some sort of the transfer from the rich to the poor must be made. Again, the challenge is even a poor country, on average, there's a big difference. So I really don't deny, what the IMF colleague, Nozaki-san particularly explained that the reallocation sort of ease the inefficiency and inequality. And probably that's a desirable way. But I think the challenge is big, so that I think we need to use every possible measures. And again, I want to emphasize the role of the private sector, including ourselves, not as ADB, but me as an individual. Thank you.
Thank you. And we've just had an interesting question coming through in terms of kind of developing markets for green bonds. What are the options for central banks? What are the roles that central banks should be playing in developing these bonds in these markets? Tomo, first, any thoughts?
Well, actually, yes. ADB, I mean, actually, my team joined the NGFS as an observer, and also, actually, I was a former BOJ, so probably I need to respond to the question. Again, to be frank, at this point, there's no consensus yet, because the central bank has a strong belief that the central bank's mandate should focus on the price stability. Having said, last, I would say 20 years, price hasn't changed much in all the countries. And now the US is focusing on the employment. So I think there is room for central bank to consider sort of stepping some sort of the resource allocation. Traditionally, central bankers are quite reluctant to step in or intervene in the resource allocation. I mean, price stability is one because price is really, I mean, the currency is really the signal, but we don't want to intervene the resource allocation. having said, I think the rating high rate or lowering rate, there is some sort of consequence in terms of the income distribution. Even just accepting the minor deflation, actually, that create the income distribution from kind of older people in Japan and younger people, because older people normally have kind of a big savings, and having a cash is quite preferable under the disinflation stage. So I think traditionally central bankers tend to think that we need to be neutral, and we want to create a kind of stable price condition so that the market can efficiently allocate the resources. That was a traditional belief, but probably we may need to rethink and consider how central banks can do a bit more. Again, there is no consensus yet, but I think it's a kind of growing awareness. Some measure may need to be taken, but again, still large, I'd say central bank community is very much reluctant to do aggressive move. That's my comment. Thank you.
Yeah, no, thank you. Do any of our other panelists have any additional thoughts on this, or some of Tomo's previous remarks as well?
Let me just chime in. I'm not an expert on the green bond market, and I'm certainly not an expert on central banking, so I would defer to my colleagues in ADB. But we do think in the IFC that it's very important that the central bank or whatever authorities are supervising banks help create the institutional and regulatory environment for green bonds. So it's not just about financing or buying them, but it's also about establishing what is a green bond, what are the risks to it, what should be the capital requirements beyond these things. So there's still a lot of work to be done on the regulatory and policy side. Thanks.
Yeah, let me add that point. Actually, the discussion in ASEAN central banks are really discussing to what extent they would sort of step in the regulatory framework. At least they I think growing consensus that the central bank may need to do so, but to what extent depends on the jurisdictions. Well, I guess the one plausible and more probably the most possible way is to encourage, let's say, the banking sector as an association or whatever, ask them to create some sort of a code of conduct or sort of our own sort of guidelines. I mean, again, the putting something in the regulations like, you need to allocate the 20% of the lending to the green. I mean, this, I don't know to what extent that is really suitable in a banking regulation. But I think at least ASEAN central banks are seriously discussing the role of central banks in this area. Outcome needs to be seen. I think one, again, possible area, collaboration with the private sector. Thank you.
Yeah, brilliant. Thank you, Tomo. Ian, Masahiro, any additional thoughts before we move on to the next question? Lovely. So my next question would be, what progress has been made in terms of investing in climate smart infrastructure and technology? And John, you kind of mentioned this a little bit in your introductory remarks, so I would like to go to you first. Question.
Okay, you broke up a little bit on me there, but I understand the questions about what progress has been made on investment in climate smart infrastructure.
Yes, and technology.
And technology. I mean, it's a hard question to answer, right? It's partly how you define what these things mean anyway. So, I mean, there's been a huge amount of investment in infrastructure, and we see that still being the biggest piece of it. Renewable energy is better transportation. These are the two big areas in the infrastructure side. We've seen some countries have made a lot of progress towards green energy. Vietnam in particular, the solar power is noteworthy. But we are also seeing still a lot of growth in coal-fired plants. China still relies heavily on coal and is still continuing to build them, as is Indonesia. And so we see that there is a tremendous opportunity to increase in green infrastructure. And part of that is opening up some of these sectors to private sector investment, because it's going to require a lot of money to make these changes. And it also goes back to my original point of it's going to be very hard to make a leap directly to clean renewable energy. To ask these big countries who desperately need power to leave the cheapest source of power, which is coal, and go directly to renewables, may be a bit unrealistic. So we may have to agree that there's going to be a transition through cleaner fossil fuels, LNG, for example, and that's what IFC is focusing on. But then there's a question of we don't want to build assets that are going to be stranded in the future, or you're going to extend the life of fossil fuels beyond what they should be. So this is something that's still being worked out, and different governments have different policies. And again, we see also a lot of opportunity in the transportation sector, as well as the industry sector. Green steel is something that's going to have to be developed because industry is also a major polluter. So, but again, many of these assets have already been built, and they have long lives. So we're going to have to understand how to deal with them. So it's a complicated process, and I don't know how you would put a numerical value, again, because it comes to how you define them. But again, just to give it a scale, IFC did a study just for, I think, the 4 bigger countries: Vietnam, China, Indonesia, I think the Philippines, just as a rough estimate between 2020 and 2030, and came up with a number of about $5.3 trillion needed in private investment to make changes in the major sectors. I'll stop there. Thank you.
Thank you. Ian, Masahiro, any thoughts on this in terms of developments within clean technology infrastructure?
Okay, yeah, thanks, John. I think we are also in line with your view on the importance of green investment. So maybe I can add just two thoughts from IMF standpoint. First, green investment is one of the most important pillar of a growth-friendly strategy of climate change mitigation globally. It helps because the green investment can create jobs and also provide support for the economy when the economy would need to also get the blunt of higher energy prices. So that's number one. And number 2 point, at the IMF, we keep track of green investment share of recovery investment. Many countries are putting lots of fiscal efforts, fiscal spending to recover from COVID. And for example, in 2020, the announced recovery measures globally amounted to around $2 trillion. And we keep track of the share of green investment. And according to our estimate, in 2020, the share of this green investment in the COVID recovery spending is only 18%. So I think we still need to see, we see scope for increasing the share of green investment in the COVID spending. And this is the important, I think, time for all of us to make this COVID spending more greener so that it will help our effort to mitigate climate change. Thank you.
Thank you. I think that touches upon a question we just had from the audience as well. So how are ASEAN countries addressing the COVID-19 crisis and climate change given the limited fiscal space? So do you have anything to add to that, initially, Masahiro?
Yeah, I think we touched on this. So basically, this is an opportunity. Again, because of COVID, countries with fiscal space, countries which have fiscal space have a capacity to spend to recover from COVID. And that's the opportunity for us also to advance the green investment initiative. And maybe we can also add that the proposed American jobs plan with substantial support to green economy, I think there are also notable actions to along with these lines. And also EU is earmarking 37% of total disbursement under the 2021 recovery facility for climate friendly investments. So I think the countries in Asian Pacific with fiscal space would also have to think about how to make their recovery spending greener.
Yeah, okay. Tomo, do you have anything to add to this?
Okay, thanks. This is very difficult question because because of COVID-19, economy is going down, and they need to recover. Of course, it is nice if they can make sort of a greener investment. Well, at this point, ADB is really emphasizing the technology, particularly the ICT infrastructure from the recovery of COVID-19. Our sort of analysis on the Asian development outlook, we highlighted that the sort of economic situation with a higher ICT and sort of the capability of the telecommunication, the impact is less. Again, I mean, if we are sort of discussing remotely, so this really creates kind of a shift of the work or maybe production, whatever. So at least we should spend more on the ICT to recover so that we can build back better. How this can be linked with the green is a bit difficult question because if the power plant is coal power plant, again, this increases the CO2 emission. So through the transition that, as I mentioned, ADB is really hoping to move to the more cleaner energy, so the coal to the clean energy. So hopefully the energy consumption structure can be transformed, and the recovery can be supported with technology. That's our sort of the basic strategy at this point. Thank you.
Thank you. John, anything that you'd like to add? And maybe also, as we've only got a couple of minutes left, your final thoughts?
No, I mean, there's been a huge amount of support provided by COVID-19. And so it's gone to a number of different areas. It's gone to help companies survive the crisis. It's gone to help a lot of social safety net, but it's also gone directly to infrastructure. And I don't know how to break that down, but it has left a huge mark, the whole COVID issue, on the debt levels, not only for the public sector, but also the private sector. There's huge corporate debts, and it's the extent to which they are going to create non-performing assets in the financial sector has been masked by the debt forbearance. So we're not really sure what's going to happen once things begin to shake out and some of the support is removed. And that will have a direct impact upon how much capital will be available to rebuild better. But again, our focus has also been, as we rebuild after the COVID crisis, is to rebuild better, to rebuild green. We have this approach in the World Bank Group called GRID, which is greening. Green, I forgot what it means, but it's brand new. It's talks about building back in a sustainable manner, and so that's what we're aimed at. And we believe that fiscal policy, which IMF colleagues have laid out, is an extremely important part of it, but not enough to be done by itself. I'll stop there. Thank you.
Thank you very much, John. And Masahiro, Ian, final remarks.
Okay, Ian, go ahead. Yeah.
Oh, well, I just like to emphasize the importance of the international dimension, because we think carbon pricing should be the centerpiece of the mitigation strategy. That's the key price signal for mobilizing all the private sector investment. But when countries are acting unilaterally, it's just very difficult for them to move ahead when they're concerned about competitiveness impacts and they don't know what other countries are doing. So we think it's very important to complement the Paris Agreement with an additional mechanism, an international carbon price floor, which should be focused on the large emitting countries to facilitate negotiation. And if they could agree to a coordinated scaling up of carbon pricing, then that would be the best way to address these concerns about competitiveness and free riding, which are holding back a lot of countries and making it difficult for them to move ahead with their mitigation strategy. So we have our own proposal. It's a flexible proposal. It takes into account equity considerations. You know, maybe you want stricter price floors for advanced countries. Maybe there should be some transparent transfer mechanisms to assist low-income emerging market economies. And this approach would also need to be pragmatic. We need to accommodate countries for whom carbon pricing is just too difficult politically, so long as they achieve similar emissions reductions through other instruments. So we're trying to promote dialogue on this idea that the large emitters should get together and try and coordinate over carbon pricing to enable a scaling up of mitigation at the global level.
Thank you. Masahiro, final remarks.
Okay, thank you so much. This opportunity and presentation, panel discussion, and questions from the people who joined this panel are very important, and then I really enjoyed. I think there are lots of good ideas being discussed. So pricing of the carbon would be part of an important part of the mitigation efforts, important of green investment, and also importance of private sector, and then importance of compensating people to affected by higher carbon price or mitigation efforts or climate adaptation spending. These are also important part of it. So there are lots of great ideas and I enjoyed it. But I think important thing is to put these ideas into action. And last remark, I think IMF is also stepping up our efforts. Again, we are putting climate at the heart of our work. And our major product, which is called Article 4 staff reports and financial sector assessment programs, are addressing climate issues. And as Ian mentioned, we will cover mitigation policies in 20 largest emitters, and also adaptation issues in countries with countries vulnerable to climate change. These are covered in our annual report for individual countries. And also we're looking at how to mobilize resources to support the efforts using the recent 650 billion of special drawing rights issuance. So we will play a role from the side of the IMF. This is my final remark, and thank you again for this opportunity.
Brilliant, thank you. We are definitely out of time now. So thank you so much to all my panelists for joining me this afternoon and taking the time. Thank you for such an interesting discussion, and thank you to our audience for listening and for asking the questions as well. Have a lovely afternoon, everybody, and thank you again.
Thank you. Goodbye.
Thank you.